Is there any reason right now to own the biggest of the big cap stocks?
Not when I look at it. When you're looking at the significantly diminished expected growth rates, and then when you look at the overall valuations, which are not particularly low and haven't really been coming down, they're really very much in the middle of the past 3-year trading range. They really don't look that attractive. Now, we know that these valuations can remain high when we're in an area of a period of declining interest rates. So that is a norm, but particularly when you look at large caps versus mid versus small, there really looks to seem like there's a massive and almost an inversion of
I think that's the word of the summer,
yes,
Erin.
exactly.
Inversion.
Of how we're valuing our super mega caps versus what we should be valuing some of our small caps.
Small caps have kind of been left on the investment rubble heap.
They have.
Why?
They did have some tough comps this year, and some of the earnings growth for the second half of the year is challenging. So, looking at the very short term, they were going into it. But now when you're looking at the next 4 quarters, they're completely expected to ramp up, have about 22% earnings growth, when the S&P 500 has 4% expected earnings growth. So 5 times the rate of earnings growth over the next 12 months.
But why are they being ignored then?
I think investors have just been so focused on these mega caps and big names that they've known. They're either plowing all the money into just their S&P 500 ETFs, and they're forgetting about other different asset classes. And I think certainly, as there are increased fears of recession, they might be tilting more to what they feel are safer stocks. But when you look at just the valuations versus growth, the valuations on the small cap stocks are so low. It's 3, 5
so they actually appear safer.
They actually appear safer, particularly when you look at how much growth they have. So even if they get hit by tariffs, they have more margins. They have better margins.
So what's an ETF way then to buy into small caps rather than selecting one of 2,000 or so available equities?
So my absolute favorite is the iShares S&P 600 small cap, IJR.
IJR.
Yes, IJR. It tracks the S&P 600 really well, and I prefer the S&P 600 as a small cap index versus your Russell 2000, just because it's 600 stocks versus 2,000. It's a little easier to track, but these are all companies that are a little more stable when it comes to earnings, and so I think that's a really good basket and representative of what the small caps.
We mentioned the I word, inversion. There's a lot of debate out there about whether that bond inversion signals recession. Let's say it does. Maybe it won't, but let's say it does. Doesn't that put the small cap earnings a little more at risk?
Potentially, but we're still looking at anywhere from 12 to 22 months. So for me, given the kind of earnings that we have, the kind of earnings growth that we're looking at, they would have to come down. Even if they were cut in half, they'd still be at twice the rate of large caps. So I'm thinking, and especially also when you're trading at such low valuations, to me, this growth value proposition is so strong. I also think that particularly when we had just such a bad August, they've been hit a lot harder. I think even on a short-term basis, if we come out with a positive fourth quarter, they'll be the ones to ramp up.